If you can get these three things right, then you completely put yourself ahead of 90% of traders, and your trading will explode and you'll become a profitable trader and even get funded with prop firms if you want. So in this video, I'm going to take all the lessons I had to learn the hard way in the course of becoming a profitable trader and distill them into a 3-part framework that I would follow if I just learned about Forex. I wanted to get started completely from scratch today. I call this framework the trading 3. Basically, if you can do all these things in order together, I'm not even hesitant to say this, but you will be successful as a trader. And the first part of the trading 3 is study. Now, the first part about study is getting a mentor. I am a strong advocate of follow who no road. Follow who no road is a term used in Nigeria that just basically means that you should try to find the people who have gone ahead of you and follow those people. Now, there are a lot of big names in the trading mentorship space, but I always say that what is important is that you can find a track record of their successes and a track record of their students' successes. So if you can't find that of the mentor's success, you must be able to find that of the student's successes. That is how you determine who to follow. Because as much as YouTube is a fantastic resource, the problem is if you try to use YouTube to want to learn to trade, the information is scattered. That's the benefit of mentorship. So these people have taken their time to distill what works so that you don't have to waste months and sometimes years trying to put pieces of information together. So sometimes it is important that you pay the price for a mentorship. And that was the first thing I did when I got started. But the problem was that I made a common mistake. And this leads me to my second point under the first framework, which is avoid jumping from course to course and from mentor to mentor looking for the holy grail of finance or the holy grail of trading. It doesn't exist. You must determine within yourself to give the framework at least a full year of dedicated effort on a weekly basis. The next important thing to do while studying is to set your expectations. If I were to start right now, the one thing I would recommend will be to go to the FTMO YouTube channel and find all the interviews that they have done with the successfully funded traders. I use those interviews as a reference point for what separates the people who are successful from the people who are struggling. And I think it is very important. If you must be at the top, you must know what is sustaining the people at the top. So find out what links the winners, find out their habits, find out the systems they have put in place, find out everything that is keeping them at the top of their game, and then try to emulate those things. Also find out the kinds of returns that are possible based on the mentor and strategy you have signed up to. It is very important that you set these expectations because a lot of the issues people face when coming into trading can be tied to having unrealistic expectations. And the thing is, expectations will differ from strategy to strategy and from mentor to mentor. So if you don't have clear expectations that are realistic, you will underestimate the amount of thought and the amount of effort it will take you to accomplish those expectations. The next thing I would do while studying is to pick up the book Market Wizards because I think that's a very helpful way to see what is possible in the trading industry. Also, expect it to be challenging. Be patient. Use the time and the privilege of your allowance if you're still living with your parents or your job or whatever source of leverage you have to meet your financial needs to take away the pressure of having to think about your gains once you come into trading, so that you allow yourself to think in terms of percentage returns. And finally, I would recommend that you specialize in one market while studying so that you get to understand that market intimately. The second part of the trading 3 is backtest. For a lot of people, part of the reason why they struggle with their trading is because of the fact that they don't have confidence in their strategy. And that confidence usually comes from gathering past data. The goal is to be able to think for yourself, not relying on signals, Instagram, trading groups, trading communities, whatever the case is. You need to be an independent thinker and be able to determine for yourself why price moves. While backtesting, every time I've collected a large enough sample size of trades, for some people it might be 100, 200, whatever the case is, I will be on the lookout for things that link my winners and things that link my losers. I will look for patterns, I will look for strengths and weaknesses in myself and in my setup. I will also study and know what I can expect from my win rate, the risk to reward that works best for my profitability, and what I can expect from losing streaks as well. And finally, the days of the week that I do best or do badly in. And this takes me to the third part of the framework, practice. I strongly believe that the biggest part of practicing is submitting yourself to risk management. You must accept that once you get started with practicing, that you will take a lot of losses. And so you must learn everything about risk management and apply it to yourself like you don't have a strategy. The next thing I would do is to demo trade. Now, I know a lot of people have opinions about whether or not demo trading is beneficial or not for a trader, but I strongly believe that while applying risk management in demo trading, you get to become a lot more comfortable with how your strategy works. So I strongly recommend that you demo trade for at least 3 months with net profitability, or at least 50 to 100 trades with net profitability. So if you don't see net profitability, you might want to consider still demo trading. And while I demo trade, I will pick up trading in the zone, because I believe that that book will help me and help any trader to learn to think in probabilities, and will also help me to learn to adopt the carefree state of mind while in any trade. Finally, while practicing, I will journal so that I can track how well I execute my trades, my emotional state of being before, during, and after a trade, how my trades are doing compared to my back tests, and what might be causing the discrepancies between my backtesting performance and my live practice performance, and how well I am following my risk management plan and my overall trading plan. Finally, if I've gone through these 3 steps, I would then choose to go live. Now, you could choose to go live with a small account, anywhere between $200 to $500 for most people, or you could just choose to take a prop firm challenge, especially the kinds of challenges that don't place a time limit on you, so that you are not under any sort of pressure to meet the targets within the time duration, and so that you can let your edge play out for you over time. If you found this insightful, I think you might also enjoy my comparison between FTMO and the Fivers, and why I think the Fivers is the best prop firm for getting started. You can check it out over here. Thank you for watching. Please hit the subscribe button if you enjoyed this as well, and I will see you in the next one. Cheers, guys.